Tell us briefly what Falcon Finance does and where it sits in the real-world asset stack.
So basically, Falcon Finance is building universal collateralization infrastructure. The idea is to allow every asset on-chain or off-chain to be able to use it as collateral and to receive USDF.
Gold has acted as a store of value for centuries. Once gold moves on-chain and becomes usable inside these different financial products, do you think it stops being a pure hedge and starts behaving like a financial product with embedded risk?
The first serious attempts to tokenize gold go back to around 2015. So what was missing back then wasn't technology, it was trust.
Once gold moves on-chain and starts generating this yield, do you think it still functions as a neutral reference point? Or does this financialization undermine that role?
In my point of view,
Hi, I'm Dr. Lorena Nessi from CCN, and today I'm joined by Artem Tolkachev, Chief Real-World Asset Officer at Falcon Finance. We will discuss why gold is moving on-chain, how it starts to generate income, and what it means that for risk and trust. We will also look at Tether's growing gold holdings, the gap between central banks and crypto markets, and the ethical and regulatory issues that come with earning returns from gold through technology rather than the metal itself. Thank you, Artem, for joining us today at CCN. Welcome.
Thank you. Thanks for having me.
Thank you. We're going to start briefly with you at your project. Tell us briefly what Falcon Finance does and where it sits in the real-world asset stack.
So basically, Falcon Finance is building universal collateralization infrastructure. The idea is to allow every asset on-chain or off-chain to be able to use it as collateral and to receive USDF. It's our native synthetic dollar, and receive this USDF as collateral against, as I mentioned, any type of collateral that you can imagine. Now we're mostly working with cryptocurrencies, and for the last 6 months we're actively exploring real-world assets in their broad way. So we started from treasuries, then we added some stocks, we added gold, we added some non-US denominated assets. So yeah, we continue in this journey.
Brilliant. So given Falcon's role as infrastructure rather than an issuer, how does Falcon think or consider tokenized gold specifically? And is it treated as usable collateral, a liquidity support asset, or something that requires tighter risk controls than cash-like assets?
Yeah, I think it's depend on how we're using it. So now we're allowing our users either to mint our synthetic dollar, USDF, using tokenized gold as collateral, or to deploy tokenized gold into the vaults. So we created a vault which is specifically designed to simplify user experience and allow users to earn some yield using this gold as a base for this yield. So it depends really on whether it's being used to mint or simply to be deployed as collateral.
Okay, moving to the bigger picture with that context in mind, gold has acted as a store of value for centuries. Once gold moves on-chain and becomes usable inside these different financial products, do you think it stops being a pure hedge and starts behaving like a financial product with embedded risk?
Yeah, I think, first of all, tokenization of gold is not a new thing, right? The first serious attempts to tokenize gold go back to around 2015. The idea was always clear: take a universally trusted asset and make it easier to move and use. So what was missing back then wasn't technology, it was trust. So now we have a lot of users who are using tokenized gold, basically because we have a bunch of trusted issuers. The major one is, of course, Tether Gold and Paxos Gold. So we have two sort of approaches here to this trust. One is more relying to regulation, and the second one is relying on sort of reputation of Tether as a resilient market player. But gold itself definitely is a financial asset at the moment. It's much more about being financial asset rather than to being like sort of utility asset. And for sure, this tokenization just gives additional way to deal with this financial asset.
Okay, so when tokenized gold produces dollar yield, what risk do you think is being introduced in the traditional or into the traditional gold holders that they never faced, or who carries that risk?
Yeah, I think it's a really good question because when we're speaking about yield, right, yield also comes with the risks, always. So you cannot earn yield without accepting some sort of risks. So I think the major risk with tokenized gold, it's the fact that it's tokenized, right? So you rely on an intermediary. Users still dealing with intermediaries that hold physical gold. Tokenization doesn't remove that. What matters, as I mentioned on my previous answer, what kind of intermediary it is. Is it trusted? Does it support redemption? Does it operate across jurisdictions and has some mechanisms that can stabilize the price of the asset? Anyway, the major risk, it's a risk of an asset or an issuer of this asset. So if issuer will fail to support the price peg mechanisms, so you can end up staying with a token which was like nothing or not exactly the amount that you're looking for. The second risk is, I think, the risk of technology itself. So we are dealing with tokenization. We are relying on particular technology, blockchain technology, particular ledger that we're using or network that we're using for dealing with this tokenized asset. So this technology risk, some smart contract risks. So if you're using tokenized gold and you're, for example, providing it like in a pair with another asset like Tether Gold with USDT or Tether Gold with Bitcoin into some decentralized exchange to earn yields. So there's a smart contract risk there. And of course, sort of whole strategy risk if gold is being used in some financial strategy to deliver yield. This strategy can sometimes faces some difficulties, and you can, as a holder, you can see some issues for your portfolio as well. But let's be clear: if you're holding a physical gold, you also have risks, which is not typical for digital gold, right? You need to store it somewhere. You need to make sure that nobody is touching your gold. You need to make sure that the gold consists of proper gold. This gold bar is the exact gold that you would like, that is acceptable for example, other industry players, and it's liquid and so on. So it's another sort of bunch of questions regarding risks if you're holding physical gold. So I think it's just another way of holding gold, another type of product. It's more like we discussed earlier, financial product rather than sort of utility product. But yeah, all ways to hold gold and all ways to earn yield using the gold has its own risks for sure.
Yes, totally. So we know that central banks buy gold to reduce exposure to the dollar, and stablecoin issuers and DeFi, decentralized finance users operate inside this dollar-based system. So does tokenized gold, you think it weakens dollar dominance, or does it reinforce it in a new way?
I think it's a really good point because just today I read the news that tokenized gold became much more, a bit more valuable as a collateral for central banks than US dollars. So it's number one reserve asset at the moment. So I think everybody see the turbulence on the market on geopolitical side, and central banks, not only central banks, I think all investors are trying to diversify the risks, and to use some asset that wouldn't be connected to particular jurisdiction like US dollar. In that sense, I think it's quite straightforward why gold are becoming more and more popular and receive more and more attention from institutionals, central banks, and other. So I'm not sure would it replace dollar or it will be some sort of convergence between them, and to my point of view, it doesn't matter, to be honest. So investors and central banks are using the assets that they consider safe for their strategy, for their risk profile. If in current geopolitical circumstances and the financial circumstances, they're considering gold as this reserve asset, let it be.
Okay, so we know that gold is often used as this benchmark to measure real value over time, right? So especially when fiat currencies lose purchasing power. So once gold moves on chain and starts generating this yield, do you think it still functions as a neutral reference point, or does this financialization undermine that role?
It's a tricky question, to be honest. I'm not sure how to answer it properly, but in my point of view, again, it doesn't matter. So I'm trying to focus on like some particular ways to use asset, or some what does this actually mean? So if I have a bunch of an asset that I would like to use as my reserves, so I'm trying to pick the assets that will correlate to my risk profile, right? I'm evaluating this consistently, and I'm changing my portfolio over the time, because risk changes, the asset and the risk profile changes. So whether this particular asset like gold is being considered as like reserve asset or productive asset, or I don't know, utility asset, honestly, I don't mind. I don't care, because I think what is really important is if it serves my goal to be collateral, to be reserve or not.
And do you think it actually changes in any way the price dynamics? The use of these technologies, or using it as we are.
So I think tokenization of gold is more or less the same of tokenization of any other real world asset, right? So it just creates another way to distribute this asset. So before tokenization, it was like one sort of a few ways to tokenize to distribute this asset. Now we're just adding another opportunity to distribute this asset. So can it create more sort of push for the price? Maybe. It depends on the volume, right? So if the volume will be high, if it's going to be a lot of demand from crypto users, Web3 users who would like to use this tokenized gold, yeah, it can be sort of good for the price, right? If it's going to be not that much demand, then tokenization doesn't magically change anything. Tokenization just a way to distribute your asset inside the programmable blockchain sort of network. Yeah.
Mm-hmm. And do you think tokenization allows us to distribute wealth in more equal ways, or do you think it allows the same people to be in charge? Obviously, not exactly the same number, but how much does it change the dynamics?
I think honestly, it's not changing this dynamics at all, because if you don't have money either on a real world or in crypto world, you don't have money, right? So if you have money or assets, you can use it either on the real world or on chain. So again, blockchain or tokenization or cryptocurrencies, they don't create equality by themselves, right? They create an opportunity, but the question is who's going to use this opportunity and how they're going to use it. So
Do you think it creates an opportunity for this equality or not?
Definitely blockchain allows transactions to be cheaper. Definitely blockchain allows to exclude intermediaries from the process, like peer-to-peer transactions, like, okay, with the gold, for example. Right now, tokenization of gold, how it works. Gold miners, they mine gold. They do the procedures to refine this gold. They are selling this gold to professional players on the gold market. These professional players, they do, again, some refineries, they're doing some arbitrage, and gold ended up being sold on London Exchange, for example. Then tokenized company like Tether Gold or Paxos Gold comes to this London Exchange and buys this gold and issue token. So you see a lot of intermediaries between actual gold producer and final holder of tokenized gold, right? Absolutely the same infrastructure. Can it be different? Yes, of course. Tether can directly deal with gold miner, gold issuer, remove these intermediaries. But the question is, would it be useful for Tether? Because Tether would like to use not just some gold, but the gold which is being considered as a best high quality gold, which is liquid, which could be sold. And if it's just some gold from some miner from, I don't know, South Africa or whatever, it can be not that kind, not liquidity grade kind, right? So can it be more fair? Can it be more transparent? Can it be more sort of peer-to-peer style with blockchain, with tokenization? Yes, but it depends not only on technology. It depends on how people are using this technology. Does regulation allows to remove intermediaries and to live in a more sort of transparent and friendly friendly to everybody way? Now, yeah, and I think unfortunately all these dreams of crypto becoming a sort of more equal way to dealing with money right now, we're not there, right? You definitely can use crypto, you definitely can use tokenized assets for yourself without dealing with intermediaries, but especially when it comes to real world assets, like tokenized gold. If you're buying token, you're trusting the issuer. You already have an issuer. It's impossible to do it without an issuer at the moment.
Yes, it is tricky, right? I mean, hopefully we'll see that change because it's part of the ethos of blockchains and DLTs and all of these systems. But who knows where is it really going to end? And talking about the future, how do you see the future or the role of Falcon Finance in this field, in this landscape?
So, as I mentioned at the very beginning, our goal is to provide liquidity. We're building universal collateralization infrastructure where every asset which can be priced can be used as collateral. So we believe that liquidity is the biggest problem at the moment. So we have a lot of assets right now that is illiquid. So you cannot use them, you cannot either sell them or hold them. And our idea is to build the infrastructure that would allow to receive liquidity for any type of asset. Now, of course, we're mostly working with assets that are already on chain, just because it's simpler, a bit more easy to deal with.
Mm-hmm.
But with all this real world asset narrative, we're digging deeper on what physical assets, what real world assets can be used as collateral, either on chain or off chain. So yeah, and I think our goal is to build the system which would allow every asset to be used as collateral.
What kind of assets would you like to see in the next 5 years within the system?
So right now, we're mostly working with financial instruments like tokenized treasuries, plus tokenized stocks and tokenized gold. I believe that in a few years, maybe even this year, we're going to have much more financial products in tokenized form, not just treasuries, but some corporate bonds, maybe some fund structures, maybe some real estate in a fund structures. Mostly, it's going to be financial products, simply because it's easier to price them and it's easier to sell them. Right? If we're accepting something as a collateral, we need to have a way to liquidate this position. We need to have a way to sell this asset if the market goes down, for example, or the quality of the assets drops somehow. Yeah, right now most of the liquid assets are financial assets, and I believe that we're gonna have more or less all liquid financial asset tokenized in the next couple of years. What's going to happen next? I'm not sure. Of course, the sort of dream to use your apartment or your house as a collateral in DeFi protocol and to receive loan not from a bank but from a DeFi protocol in a simple, transparent way. But it's a long way ahead to be there, because a lot of questions should be dealt with. It's not only connected to technology. I would say it's not connected to technology at all. It's mostly connected to regulation and to various things that needs to be sorted before it's going to be possible. So for Falcon, I believe yield-bearing financial assets, volatile real-world assets like stocks, gold, silver, whatever. We're exploring commodity-linked synthetic instruments at the moment, like gold or silver reference unit, built on the same collateral framework that I described before. So our goal isn't to launch new tokens for the sake of it, but to let users express commodity exposure inside the same sort of on-chain liquidity system, without selling assets or leaving the collateral stack. So yeah, I think I answered the question.
Thank you, Artem, for joining us today. And we hope to see you soon and know more about Falcon in the future.
Alrighty, thanks so much for having
Thank
me.
you. Thanks.
Bye-bye.
That was Artem Tolkachev, and I'm Lorena Nessi for CCN. And thanks for watching, and see you next time.